There's no guarantee the market will come down 3 without going back up, though. This is on here for a reason. It was a sticking point prior. Prior day sticking point. All right, so if we didn't get out, 87 and 64 are the targets to coming down. So this right here, why I got out, well, one, I was in a loss, and we're playing in an up, right? So we're trying to take a short in an up move. It's already been up 6p on the day, and this could have been all that it was going to come until it went back this way. So that's why I protected. Now maybe I should have protected above the 200 bar line, but I was looking at my minus 22, and I was trying to get back as much as I could on that. So I ended up finishing at minus 7. But my first 4 trades earned me a minus 22. In my humble opinion, any day that I can be under about 20 ticks of loss, so any day that I can be under minus 20 on trading one, I believe I can get that back on the next trading day. Thursday, historically, has been my best overall trading day. That should be an R. Boy, I tell you what, you have no idea how hard it is to anyway. So we finished down minus 7, at least I did. I had an anomaly bar right here, by the way. That's kind of interesting. So the market did run a 3p target. So the market did run a 3p target. If we look at the overall strategy, we're on the wrong side. So the red bar. Now, the reason I didn't like the long, I'm going to be real frank about why I didn't like the long. A couple of reasons. I saw this right here. So this actually tricked me. And is that higher than that? And the answer is no. So when I did see this against this, I really thought we were coming down around this level. That we're going to trade up here around the pivot line, maybe in this area right here, and we were going to sell off into the rest of the day. That's what I originally was looking at, is a move back down to, and then the inventory itself was positive, right? So we saw 4 million build. So you think an increase in inventory should bring a decrease in prices, but the thing that's playing more of a role than I'm willing to admit sometimes is what's going on in Iran, right? The bullshit that's going on right there in Iran, and the powers to be trying to start World War III right now. You know what? Somebody needs to get these war-hungry people in powers and to be right now. We have no business being there. None. I mean, if we start a war there, Lord help us. I don't know who. I mean, they're getting ready to send 120,000 soldiers into Saudi Arabia. I don't know if that's true or not, but that's what I've heard. And guess what? Who else has nukes besides us? Russia, China. Who supports Iran? Russia, China. Do you think they're going to allow us to attack Iran, who has oil, without some repercussions? So who in the world, what crazy person is in charge of, you know, who's the crazy person in charge of the asylum right now? It's bullshit, man. Absolute bullshit. Anyway, all that is being reflected and played out on the global stage, especially as you see in the stock market, the higher volatility in the stock market, the higher volatility in the crude oil market. All this is being played out on the global scale in the futures markets. So if this false flag, Iran right now, have no business being there. None. I was so proud when Trump pulled out of Syria. I'm not going to get into it any more than that because I could really go down the rabbit hole on this. But this is what's influencing the global market. Even though we have an inventory surplus being built up, prices are doing the inverse of what the inventory should be doing. So what did we do today? What did I take advantage of here at that time of trade? Took advantage of the Fibonacci number. Kind of like the last line of defense on the short side. And I used that Fibonacci number to at least get some of our money back, or my money, I should say, in the step 2 here at Top Step Trader, and put myself in the good position to find a decent trade tomorrow. There's an old saying I like to say, live to fight another day, right? Live to trade another day, man. And along those lines, if you can't trade one contract profitably, more times than not, you won't be able to trade anything greater than that either. Now, the thing I want to talk about here in the last part here for the course members is dollar cost averaging yourself into a trade situation. If you're in the room today, you saw a gentleman here that was dollar cost averaging his way in to trades in the futures market. Now, whether he is experienced or not, I don't know. What I do know about dollar cost averaging yourself into the futures market, humbly speaking, it's the quickest way to the poorhouse that I know in futures market. Because there's going to become a day when you do that you're going to run against the table limit, and they count on that. If you think about the casino, what are they looking for you to do? they're not in there. Well, they want to supply you with drinks, right? But they're not in there to give you free money. They're just not. That's not why the casinos are built. That's not why they wine and dine and bring their whales in and whatnot. They're not in there to do that kind of situation. But what they're there for is people to be stupid. And and the only way of the Martingale strategy works is if you have unlimited funds. But if you but they're not going to let you work with unlimited funds in the casino because they have what's called the table limit. Now the table limit might be 2 or 3,000 or whatever. They're only going to allow you to play like on the craps table. They're only going to allow you to play up to like say $3,000 across that board in any given hand or blackjack or you name it. So the martingale is this. Every time that you lose, you just double in and double in and double in and double in. Your dollar cost averaging is another way of looking at the martingale strategy because you are adding position in a losing position. So in the futures market, adding to a loser is an extremely poor logical way of doing it in the futures market. I can't stress that enough. Yes, it works in stocks. And the reason it works in stocks is that you're not risking your 401k is averaged out over its lifetime of you working at whatever company that you've chose to work for. So every week or every bye week, the money is coming into your 401k. So it averages out that in the stock market historically continues to move up. And so therefore you're buying at the highs, you're buying at the lows, and your dollar cost average your price at a certain level because of the power of time. What you don't have the liberty of in the futures market is time. Your time is limited. Your money is limited. And whatever your account balance that you have in your trading account, dollar cost averaging or martingaling into your futures market itself, you're going to run into what is called your table limit in the futures account. And your table limit will be your account balance, whether it's 5,000, whether it's 10,000, because what's going to happen is a couple things. One, your emotions start to getting out of control. And then the next thing you start doing is you start illogically thinking what you're doing at that point. So you get into I call it the WTF scenario. You just basically say, what the F? And you just keep on piling in, thinking, I'm going to dig my way out of this. More times than not, you're going to be able to dig your way out because you're just going to keep going at it. And you might end up being 90% right, 95% right, being able to dig yourself out of the martingale way of looking at trading. The problem that you're going to run into at some point in your trading count, you're not going to be able to dig your way out because you're going to run into, and in the futures market, when you do run into the other side of this, it's called a margin call. And they're going to liquidate everything you got. And they're going to say, all right, you need to ante up this. And this is the way that most of the big firms have ended up going belly up and bankrupt because they have allowed a trader to do that kind of thing. So for instance, some of the biggest traders that have lost millions and millions of dollars have continued to move themselves into this market. It's a proven statistical fact that eventually you run against your table limit. If you run the futures market like that, you're going to run into your table limit. You're going to run into your account balance. You're going to run into a margin call. And do you really want that margin call phone call? You don't. You don't want that margin call. You don't want to have to put up your car. You don't want to have to put up your house. You don't want to put up that stuff. The martingale strategy in the futures market, I cannot stress it enough, is the quickest, fastest way at some point in your future put yourself in the bread line. All right? That's my that is my chit chat today that I'm going to put up on YouTube. I don't think I mentioned any names there. I'll double check.